we're doing IG too, huh?
Yeah, I decided to add my IG just to be able to, instead of trying to get them off that platform, to go over to LinkedIn. All right, let's go. Technology. Hey, everybody. Welcome back for another edition of Scale Smarter with me and Frank Majorana from JustWorks. We're continuing we're picking up the conversation from a previous one with 𝘁𝗵𝗀𝗀 with Joe Sarno, who's going to be our guest today. He is the other half of the equation that 𝘁 said that every business should really have in terms of what to do in order to start their business properly, from having their tax documents and formation documents, and then now having the accountant part of it. And so, Joe, welcome to the show.
Oh man, thanks for having me, Ali, Frank. Good to see you guys. This is cool. Let's do it.
All right.
Awesome. Okay, cool. Yeah, so we said we were going to sort of dive into the financial and tax considerations that every business owner needs to understand. And Frank, I think you and I were talking about this in a follow-up in terms of, what's that first thing? Like, what's the actual difference between like an LLC tax as an S Corp versus staying as like a single member LLC? And then like, when does it make sense financially?
Yeah, absolutely. That's what we're going over, and that's why we got Joe here.
All right. What are we doing here? What's an S Corp? Why are we doing that? Well, really, it's an election. It's not a separate entity, right? That's something you'll check off when the time's right. And the question here is, when's the time right? When do we do these kind of things? You're starting your own business, right? Right, guys, and you're just getting rolling. I mean, you're going to probably do, like you said, maybe it's a partnership, maybe it's a sole propriety. LLC, at that point, you're just subject to the self-employment tax, 15.3%. The timing to really move on, if you're making like under 40,000, for sure, stay with an LLC. Get the business book working, get your feet under you, because the big difference here is when you go to an S Corp, you got to pay yourself a salary. Mm-hmm. That's the biggest thing between the two, between an S Corp and an LLC, right? If you're really doing the LLC and whatnot, I mean, you're just going to take profits and pay a self-employment tax. Once you start getting like 50, 60, 70, 80,000, at that point, you got to decide, all right, maybe it's time. You have until March of the following year. Sometimes you get extended anyway. Okay. Elect it to be an S Corp. Start paying yourself a reasonable salary, right? Like that's the biggest key. At that point, you're subject to your normal payroll taxes and what have you, and everything else goes as a distribution. Bye-bye to the self-employment tax. That goes away on your distributions, right? And also keep in mind, one of the, one of the things we have is the QBI. You guys know, we're talking like the qualified business income. You guys know what I'm talking about?
No.
Explain. I don't.
You don't know this. This is so cool.
Listen, I'm not going to pretend to know what I know. So yeah.
So like here we are, like you're starting to, you're making like 100,000. You got to do something reasonable with your salary. Don't get cute here, right? Or let's say you're making 200,000. You can't just take 40,000 in salary and 160,000 in distributions. The IRS looks at this. They will audit you. Do something reasonable. Make it make sense, right? Yeah. And you're going to have to look at it and say, well, maybe it's 100K of salary and 100K distributions. That's reasonable. Or maybe it's 120 and 80 or 80 and 120, depending on the hours you're putting in. We can, in what the type of business you're doing, that'll ultimately determine, where you're going to end up landing. You know what I mean? Like that's the biggest takeaway of it all is you're going to have to, that's the best way to, we're going to go through it. But let's go back to the QBI. That's so important. Under the big, beautiful bill, 20% off your income comes off the top. Okay. Right? That was set to expire. That was done in 2017. That was set to expire in 2025. The new tax bill made it permanent.
Okay.
So now you get to reduce your income by 20%. that doesn't include the piece that you're paying yourself salary. It's what's left after that. Okay, that's where the QBI is going to be made permanent. So,
So
these are
20% off the distribution we're talking about
of your profits. Yep, which is going to be your distributions, especially if you take it off. Some may stay in the business, and we can, that's a whole nother can of worms we can get into. But the long and short of it is, like, you want to get to a point where you're at an S Corp. You want to get to a point where you're paying yourself a salary, you have distributions, and then you have a lot more flexibility, and there's a lot more advantages tax-wise to you. That's the biggest key.
Yeah. And just before we continue, I forgot to say at the top of this call or this live stream, this conversation is for informational purposes only. It does not constitute legal, tax, or professional advice. So please consult your attorney, your CPA, or other qualified professional regarding your specific business situation.
Go ahead, Frank.
Joe, I do have a question. Like, when you look at reasonable, right? Reasonable and salary. Like, so let's say you're saying I'm going to pay myself a salary of, let's say, $60,000 to $70,000 a year, or whatever it may be. But then you have a blowout year, and you want to take those distributions. What happens there? Because you said it has to be somewhat, somewhat fair, or somewhat kind of even. What happens when you kind of just misjudge your, what your income is going to be or what your distributions are going to be?
I mean, sometimes it's paying yourself a bonus for these kind of things. I've seen that happen. Because if you had a blowout year, wouldn't you have a bonus, Frank? You brought in all the extra business. Wouldn't you guys get extra income for that? I know I would as well. Profit sharing. There's ways to do tax shelter too, right? Wouldn't you want to pay your retirement now? And you could start sheltering your money. We could do a 25% employer, 401k, that kind of deal too. So we could start protecting the money that way. When you do have a blowout year, and we've had companies come to us with this, it's like, well, what can I do to reduce that? And those are some of the ways that we come up with. It's like you can't be unreasonable too, right? You can't just defer some of this. You have to make sense. But one of the things that comes up is like, setting up that 401k, right, Frank? A thing or two about these 401ks benefits. But like, you want to convince these businesses, or you want me to tell hey, call my guy Frank if you're ready. And what we want to do is make sure that you're setting yourself up for the future and not paying taxes on that, or paying as little as possible, because the government wants you to do this, right? That's why they give you these types of incentives. They want small businesses to grow. That's what the QBI is all about. So you have a blowout year like that, I think and your salary was sitting at 70 all year. It may come down to December and you're like, all right, it's reasonable for me to take a bonus and show the IRS, like, I'm not going to do 70K and then 200 of distributions, where you could end up being like audited. Again, it's hard to see without seeing the business what it really was. But again, every scenario is different.
Last question along those lines: are there penalties associated with it, or is it just they would get audited and you?
It could lead to penalties, right? You're, for the type of businesses you run the risk of penalties, and then they'll ding you on the interest for the taxes you should have paid. If you really try to get away with it and you do 40K of salary and you're taking 160K of distributions, you do that a couple of years in a row. I mean, that's where it starts to fall back, and they're like, hey, wait a minute, we want to see what you're actually doing. We want to see some of the work, and then they're going to start auditing all your receipts, different things like that. So and these are the ones that stand out. They're not going to look at the guy, the W-2 employee. They're going to look at the business owner. We know that.
So, well, one of the thoughts that I had is, what's one of the craziest, without revealing any names, scenarios have you seen where people have, set up an S Corp and try to be funny with the numbers in that regard?
Yeah, I haven't, we give good advice on these kind of things. You know what I mean? Like, and people usually heed that advice. You don't want to get down that road at all. And I would even say that, it's funny. Like, we know taxes. I know taxes. There are even bigger experts at our firm. I mean, Craig Johnson and Bill Dickinson are fantastic resources. You know, I always lead the way with them. I can bring out all different people in. I know they probably have the better war stories than I'll ever have with this stuff. But, you know, long and short of it is most of our clients heed our advice when it comes to this. They don't get themselves jammed up in different ways. They're relying on their professionals. That's why they're hiring an HFA and they're not going to an H&R Block and trying to figure it out themselves. They're serious about their business. They're serious about planning. They're serious about what next year looks like, and they're always thinking about, you know, how to best protect their money and their assets.
So how often, you know, along those lines, like how often do you think a business owner should be working with his accountant and kind of having conversations?
That's a good one, man. I mean, that's just right off the top. You know, I think, you know, you want to start this is the interesting piece, right, Frank, because it's going to tie into like even my wheelhouse of like some of the fractional CFO services too. Like, at what point are you the guy doing it all? You know, you know, I would always say start tax planning in December, and probably even sooner. You want to do it in Q4, and you want to look at like, all right, what are we looking at here? All right, are we going to be funding a 401k for my employees? Well, you have until September to make the payment, which means you're gonna, you know, the business is going to need an extension, which means your personal is going to need an extension. We're gonna, you know, then it's like, all right, when do you plan to make the payment? Let's see how cash flow is looking. You know, let's get into the books, and that you want to have those conversations if you're serious. You know, like if you, and then it's almost like then you have to ask yourself, how much are you diving in and really doing it yourself, right, guys?
Yep.
You know, you're sitting here in QuickBooks. If you're slowly clicking around and it's taking you a long time to go through this stuff, or it's a drag, and you're like, oh, I don't want to do this right now. And it's Sunday nights you're doing it, or any night. Usually it's Sunday nights. And you're like, oh man, I got to do the books. And, you know, at some point you got to say to yourself, does it make sense? And listen, I would even plug some of my, you know, I got guys that just one-man shops that just do QuickBooks if it's a small business, right? You know, it doesn't have to be at a firm like ours that are 90 to 100 professionals. We got there's enough people out there that can help you. And maybe you should ask yourself, should I really be doing this? Should I have someone that actually knows the ins and outs of this stuff, handle my books the way it is, and hand it back? Because I'm going to tell you what happens, right? I can't tell you how many times I go to the tax guys and they're like, oh, Joe, I had to clean up all their crap anyway. Yeah, I can't tell you how many times. And it's like, you thought you knew what you were doing all year round, right? And then you get a bill from your accountant, right? Not just us or anything else, right? You get a bill. And the bill comes in, and maybe it's like, hey, listen, we're going to charge you $12,000. We're going to cover this one's individuals, your kids, business, this business. We'll lump it all together with the tax planning. But, you know, it's also baked in there if we have to redo all your QuickBooks entries on the tax side. You know what I mean? So, like, you're gonna pay for it. You know, it's very rare that we get like a flawless, books here. Like, wow, I mean, that was perfect. You know, we get to plug and play. That doesn't happen here. So to go to your point, man, I think you should be working with your professionals, you know, or at least check in with them, or at least know that it's being handled by somebody, right? Like that's the way I'd want to be. If I'm running a business, I want to be the person just making the widgets and doing my consulting work. I don't want to be sitting here fumbling around and saying, what do I do here? You know?
Yeah. So it sounds like it's more about time spent than necessarily revenue. It doesn't, you don't hit a marker of like $1 million or $2 million. It's like, is it worth my time?
Think about it this way, Frank. You have a small business, right? You have a small business, and I'll tell you, my billable rate for director level, $235 an hour. There are guys that are cheaper. There are guys that are way more. You know that. And you give me a couple hours a month. Maybe it's $500 worth of work a month. Isn't that better? I'll do the work, in half the time, and I'll be twice as accurate. And you get that time back. You know what I mean? Like, and if you're good at what you're doing, you're efficient, there's one of two things. That's time back to you and your family, or it's time, it's time spent in business development, time doing billable hours. Like, I don't know, there's a lot you can do with this kind of stuff. And, people should be thinking about that, especially as you're scaling your business. That's the whole point of this, right? Yeah. We're bringing in an attorney to help draw this whole thing up, right? When does the accountant make sense? And then, then it's like, all right, then there's other pieces of this whole business. I don't know how do I make my life more efficient, Ali? I don't know. I just do this. That's all I know. Those are your favorite people, right? It's like, well, that's the way I've always done it.
Yep.
You know that. But ultimately, we have to, it's hard to break into some people. We know that. But I mean, that's the whole point of, our existence, and making sure that you get that expert knowledge. And in the accounting world as a whole, what's happened is we always were compliance based, right? All of us. It's HFA. It's always like, oh, yeah, it's taxes and taxes. Obviously, there's audits out there. We know that. We have audits in nonprofits, to the public sector, to the private sector. Forget all that. It's always been compliance. Everyone's like, oh, yeah, who's your accountant? I got to do my taxes. Mm-hmm. Now it's like compliance and CAS is the term. That's client accounting services. Okay. And like that's the part where it's like, well, let us do it throughout the year instead of handing off broken books to your tax guy, getting a big bill baked in, things like that. Like, you should have a pulse of what you're doing. It can help you plan better when you're doing your taxes, right? Sometimes it's after the fact. It's like, well, if we had this conversation earlier, I would have recommended this. This is why it's important to have these conversations throughout the year. And who better than to have the same firm doing your stuff throughout the entire year? All right, now it's going to go over to our tax gurus, and they're going to look at everything, and we'll do all these XYZ returns. So I don't know. I went on for a little while there.
No, that's good. And you said a couple of things that I really like there in terms of, you should be having these conversations on a regular basis. I can tell you that one of the most frustrating experiences that I've had in the past is I've hired, accountants, CPAs, and I would only hear from them when it was, my bill was due, for the monthly services, but then it was like tax time, right? And we're here to have this conversation of how to scale smarter. So it really does come down to, okay, what are the things that I need to be doing today so that I'm prepared for 90 days from now, or I have a vision of where I want my business to be 3 to 5 years from now. Mm-hmm. What do I need to do today to make sure that I've got a solid foundation for that? And I think it's really, really important for business owners to be mindful of, having those relationships so that they can go and talk to someone when, a big piece of legislation comes out, it changes, and there's a way that it can affect their business.
Yeah. I mean, you want to be prepared for it. I mean, what happened in the big beautiful bill, and there's incentives here, right? There's different incentives if your business is offering family leave, for example. Like I said, the extended QBI, the limits for the standard deduction all went up across the board. Child deductions are permanent. Certain things are being phased out. You're seeing that the electric vehicles being phased out, but there's also tax credits for American-made vehicles. There's different limits on weight and what have you. On the loan interest, you get to deduct some of that if you bought an American vehicle. So if you didn't know all these different things, I mean, that's a piece of it. The bonus depreciation, that's there, and Chapter 179, I mean, that's going up to $4 million for 2.5. You want to know some of these things as you prepare your books this year, and it could reap the reward. I mean, right now it looks that way, that this is, tax cuts across the board from W-2 people to the small businesses, especially making things permanent. It's definitely going to help out when you come, when the push comes to shove. But you got to have a good professional that can tell you that these things is probably the big piece of it.
Joe, it's funny. Ali and I have talked a lot about kind of keeping the end in mind, right? You're starting a business, you're excited about whatever it is, but kind of know where you're going. And sometimes that has to do with kind of your exiting, right? So what are some mistakes that you've seen business owners make in the beginning, as around how they may be managing their money, that makes their business almost unsellable on the back end?
I think it's more not necessarily mistakes in the beginning. You're allowed mistakes in the beginning. You're trying to find your footing. You're trying to find your clients, and I would almost say you're going to have to to fail to make it. Certain things you rather fail in the beginning than you would towards the end. The end is the crucial part. You get one shot at that usually, and you got to start planning a runway for when the time's right to exit the business, right? You know, so many people, this is their 401k, this is their livelihood, and you're getting up in it. Once you start getting towards an age, it's like, well, what's the plan, right? What is my business worth? You know, do I have a valuation of what it could be worth, what it could be paid for? Yeah, we do that, by the way. You know what I mean? Just throwing that out there. But, you know, and then it's like, who are my likely buyers? And then when that time comes, who are the professionals I surround myself with? You know, you had Faye on here. You will need somebody like that all day long, twice on Sunday, right? You need a very good attorney that understands business law and corporate transactions. No two ways about it. I see too often accountants get left out in this process. In fact, I see it's just attorneys talking, and once you miss us, you know, you may miss the valuation piece. You may miss other different facets that could be affecting your bottom line that lawyers may miss. They may be focusing too much on the agreement and less so on the financial impact. Hey, listen, are there people that are both? Yes, there are, but that's not always the case. But you need different professionals. A financial advisor makes a lot of sense here too, because what do you do once you do sell your money? Like, where do you want it? You know, what's your plan? How much money do you need? You know, how much insurance do I need? I used to just run this through the business. Now what? You need all these pieces when the time comes. But the key here isn't necessarily in the beginning, Frank. It's like, I'm more concerned towards the end. I'm concerned of like, hey, we're getting into our 60s. Where am I going? Is there people in the business that can buy me out? Are they able to buy me out? What's their timeline to buy me out? You know what I mean? Like that too. Like, is it going to take them 10 years? You know, do you need the money in 2? You know, all these things are going to come into play. You know, you got private equity lurking, and they don't really care what business it is anymore. They'll buy anything. I mean, let's face it, they're buying CPA firms. You know, I know that they're approaching everybody. You know, I know that it's been approached to us. I'm not in those conversations, but I know it's happened. And you know, you know, you're trying to keep up with technology too, guys. So now it's like, all right, you don't want that time to pass you by. Imagine you're holding on to the business, and like, you know, are you able to pass the wealth down? Because if you go down with it, you know, that runway's it's not there. You know what I mean? Not anymore. Or the technology passes you. I mean, we see what AI is doing. It's doing so many lower level tasks, and it is just exploding the usage among workers and things like that, and businesses that employ it. If you're not keeping up with that, and you're not putting the investments in, and you can't keep up with it that way, it's going to be more and more difficult to keep up, and you may be just, you know, left in the dust. So go ahead, sorry.
No, I was just going to say, like, you know, there are a lot of business owners who get very romantic or emotional or, you know, attached to the business, which, you know, of course they've been running this business for you know, a big portion of their lives, but their understanding of the value of the business versus how it's perceived from the outside is vastly different. 100%. And I often find that that's like a big gap in sort of having those conversations. They think it's worth this much, but it's like, no, it's actually worth a little bit less, and it's getting less because, you know, of these technological improvements and other things that are happening.
That's right, and you're right, and you need somebody that can counsel you, right? This is reality. If you want to hand this business off to a competitor, or not hand it off, but you want to get into a transaction where you're getting bought out, this is where the landing part is going to be, and working with the different brokers and attorneys and accountants that will explain this all to you. If you have a good team around you, you'll be well informed, and you'll make a great decision. If it's you and you're just saying, well, this guy got this, I should get that, you may either be holding on to it too long, or you can be selling it too short, or whatever. There's a bigger propensity of a mistake happening.
Something that I kind of see a lot is, you know, smaller organizations leveraging 1099s, right? A lot of 1099s as versus W-2 employees. From a valuation standpoint, like, is that something that a business owner should take outside of the, you know, the the classification, whether a person can or can't be, or should not be, identified as a 1099.
That's a whole other ball of wax, man.
That's a whole different topic. But from a
You know,
valuation standpoint, does it make a difference?
it could. It absolutely could. I mean, in niche businesses, or maybe something that's tied into just the owner themselves. Is this something that's scalable to somebody else, right? Like that's the key part of this too. And like where like you said, is it a bunch of 1099 employees that we can plug and play? Is it institutional W-2 people that I have to keep even with, I have to take people on? All these things will affect like the multiples of what your business is doing. Like if we're going to a beta and different things like that, and how we value the company. And is it 1.5 multiples, 2 or 4 or 8? That real matters. It's like what's the business one? What are the costs involved? How much is tied into the owner? Is it super niche? Is it something scalable? Like all those are probably questions that go into the valuation of it all. But
Ali?
Yeah. I mean, those are all great questions, and those are questions that I try to have with the clients that I work with when I'm talking to them about their systems and their processes. It's like you can document all these things, but is it attached to a lot of tribal knowledge within your 1099 employees, or even the business owner themselves? Like nobody wants to buy a business that's attached to a person who we've said this a couple of times. You are going to exit your business through death or some other circumstance. How well you prepare for that is really up to the conversations that you have and the professionals that you surround yourself. And so, that's kind of, not to get morbid, but that's really what we're talking about here.
No,
Thanks, Ali.
Listen, financial advisors, I mean, more so than we definitely bring this up routinely. If you have a good financial advisor, and that you're one that you could talk to, not buried away in a building somewhere.
Yeah.
That's, what I mean? And you can actually have real conversations with. They're the ones that are going to tell you we need to start planning for this. And we need to start thinking about, what does it look like for you? Where do you want to be? You want a second home? Do you want to do this? Do you want to leave money for your kids? Are you paying for their colleges or whatever it is? I mean, that's what they do for you. I mean, they handle all of those different things for you. I mean, queuing it up here for our friend Seamus. I really am. I'm putting another.
No, Seamus is definitely like one of the next guests.
I think it's got to be, because I can't stress enough the importance of somebody that can talk like that. You know what I mean?
Yep.
And it's no secret. Like we don't have a financial advisors directly at our firm, but there are some that do. Some that have. It's like, okay, fine. We're going to go here. Here's our compliance department. Here's our CAS department. Oh yeah, we have our financial advisors over there. So there's one-stop shopping even at some of these CPA firms you're seeing. Some do, some don't. I know there's pros and cons to either. I understand that, but they do work hand in hand. And even for us, when we don't have financial advisors right in the building, we definitely have close, trusted partners like Seamus.
What are some of the things that a business owner could do to make themselves a really good candidate to work with you?
If you have professionals around you, you want to make sure you're serious about doing this. Like, they're open to your ideas. You're gonna have. It's hard. I mean, I say this, it's like, oh yeah, if you're open-minded, we can get this whole thing going, and it's going to just work out great. That's not the case all the time. It's saying, hey, listen, like, it may make sense to have an attorney here. It may make sense to make sure that your benefits are being offered the right way. We need to tie in X. We should call them in. Business owners that you want to work with are the ones that see the future. They're probably the biggest piece of it. They know what they're doing today, and they know what they're very good at what they do. But they also say, all right, 10 years from now, I want to buy 5 of these. And I'm going to blow this thing up. Or it's like, hey, listen, I'm winding this thing down. I have a son or daughter that I'm going to hand this thing off to eventually. And this partner Y over here, they're going to buy me out at X at a rate that we determine. So, that's the best thing to do. So you have a forward, can you see the future? And most people that, we all can't see it, but you're prepared for the future and you're setting yourself up. And people with financial advisors and good professionals usually are the ones that make themselves more marketable, because they're going to be more open to doing different ideas. Because a financial advisor, they have multiple clients. It's like, hey, listen, I have another one of these over here. Did you ever think about talking to him? Do I have a lunch on me? Like that, it's those connections, right? And opening the door up, like, hey, listen, I was talking to my CPA, I was talking to my attorney. You want to build those networks out. 100%. You want people always thinking about you as you're going through your day.
You want to be intentional about it, right?
100%.
So it's kind of maybe a bit of a silly question, but when you're starting a business and you're kind of talking about growth, right? And let's say you have a decent runway before retirement, so that's not necessarily right away. Should you be focused on you driving your profitability, or should you be focused on just driving growth?
What do you think the answer is? What do you think the answer is?
I would think growth, but I'm probably wrong.
You're right. You should be focusing on yourself, and you should have your professionals planning for you. Mm-hmm. Think about it. It goes back to what we were talking about earlier, right? You need to focus on what you're good at. Drive the growth. You have a good runway. You have growth going here. It may be a point where, what were you doing on your own? Because now it's time that you got to find somewhat of a clone to help manage some of your other stuff. Because if you're really expanding and going wild, you need that project manager. You need that other director. You need that other partner. Maybe it's the time that you're going to buy that guy out, and you're going to work together, or whatever it is. Like, or we're going to make that big technological investment. Like, dude, it's time to invest in that. We got to get the software in. Otherwise, we're going to fall behind. And then I'm going to get someone to implement it. I'm going to go do my outsource IT guys, and we're going to do this. Like, that's, you need to focus on yourself, though. You need to focus on keep building it. Let the professionals surround yourself with people that can work all the other stuff out. You're better suited that way. If you're so worried about everything else and you're looking around, what am I going to do? And eventually you're going to lose focus of what it really is. And it's got to be you.
Yeah. And that's part of what you're just talking about, just offloading any type of responsibility. Like, you got into business to focus on, like we always use in our world, right? We're a PEO where we take care of a lot of compliance and payroll and all that other stuff. But business owners did not go into business to run payroll, to take care of make sure their employees are compliant. They got into business because they're good at something, or they enjoyed something, or they were lucky enough to be handed something.
You do. I can't.
Makes complete sense. Yep.
Yeah, just don't mess it up, all right? That's the last thing I need.
That's why we have E&O insurance and all that.
Yeah, go one-stop shopping, get it done, do it the right way, and I think you're better. You're better suited for that.
Awesome.
100%.
Awesome. Okay, I had a comment here, Joe. You have great insight, and they love how relatable you are. How relatable and down to earth you are.
Oh, nice.
There you go.
Thank you.
Want to share that? So that's pretty cool.
I appreciate it. I mean, we got to break it down, man. Let's just talk. It's just Joe. It's Frank. It's Ali.
Yeah.
We just want to help you out. I mean, that's we're not above all this. We're in it with you.
Yeah, I think that's been just the more business owners that I've talked to. I think there's just a big misconception about what does it take to really set up a business, to set it up correctly, to really plan, to drive that growth and create something that's going to last beyond them. And I think that's often what stops people from reaching out. Right? There's a little bit of that, this is really big. It's going to take a lot of work, a lot of energy, or there's some shame sort of rooted in, like, oh, my books are messed up, and I don't want Joe to see how messed up my stuff is, or I don't want Frank to see how non-compliant my stuff is.
Frank's coming to me. He's like, "Yo, we got to reissue. These 940s are messed up now." Listen, that's not. It happens. I mean, and you make mistakes, okay? But you know what? You know, maybe it's a small fine, a penalty. Okay, put it behind you and move on.
Yeah.
The best quarterbacks in the NFL, when they throw an interception or have a turnover, right? Do they worry about it? No. The best ones put it behind them, and they're right back under center, and they're throwing the ball again. They're not afraid, and that's the way we need to be. Don't be afraid to come to us. You know, you have a busted playbook, and things are a mess, and the offense isn't humming. Well, get some good coordinators around here. We'll fix that.
Yeah.
Okay, we'll make this thing humming along before you know it. I mean, that's what it's about. Do what you're good at. Focus on that, and just understand that, hey, if you need a hand, there's people out here that, I mean, that's what we do. I mean, and I know it costs money. I know it's going to cost a few dollars. I don't like spending money on. I never had to spend money on that. You know, why do I need a guy like Ali? I'm like, I don't know, because he's going to make you 10 times more efficient, and the money you pay him, he's going to, triple for you. So, okay. You know, you want someone that's going to understand your operations, someone that's going to make sure you have a clean book of health on your finances, and then someone that can run seamlessly in what you do, right, in terms of your benefits plans, and and can handle all the hiccups along the way that go with that. So, I
also look down the road for you and say, like, hey, this is coming up. This is something that you want to watch out for, right? I think that's a huge thing for a lot of people. It's just feeling like somebody's looking out for you.
Yeah, it's a nice thing when you call a client and I'm like, hey, listen, we should think about this, and maybe it's like a week or two go by, and they're like, yo, man, I appreciate that. Thanks for looking out, and that's what it's about. The business owner themselves are so immersed, all the time. Like sometimes I joke, it's like I can't get a hold of these guys. I mean, they're just, I'm like ringing, texting, emailing, hey, and then you finally get a hold of them. Oh, I'm sorry. It's like 3 weeks later. I can't tell you how many of those we have, and they're great. I love it, but at least they're focusing on what they're good at, and they're letting other people handle everything else that goes with the business. Like,
or it's 8 o'clock at night on a Sunday. Joe, I got your call. Can you talk now?
I answer, like, as long as I'm not putting my kids to sleep. Like, I may end up calling you back at 9:30. I can't tell you. There's definitely clients that have heard me that late. Like, if it's easy for me to talk, I'm up.
Yeah.
As long as I don't fall asleep in one of the kids' beds, I'm good.
But I'm saying, like, it's from their time, right? Like because
that's
busy,
when you're free.
Working, like, that's
so be it. Right?
Right?
You're free at 6 a.m. I'm up at 6 a.m.
Yeah.
Fine. It's fine.
Couldn't agree more.
You got to be there for your, for these folks. There's no, this, if that's when it's good time for them to talk, it's like, all right, I'll make it work.
Yeah. No, that's
not
completely fair.
Yeah. It's like, I'd rather you interrupt me at, 9 o'clock while I'm, in between dances or whatever, doing salsa, than to wait until the next morning. And then now the problem has grown to something even bigger.
Then you can't get in touch with each other. Then the calls start going.
Yeah.
And then before you know it, it's phone tag, and then someone gets annoyed.
Yeah.
Then by the time it's, let's just set up a good time. And I don't care what, as long as it's reasonable, and, we'll make it work. Right.
Yeah. That works. All right.
Well, we're coming up a little bit on time. Is there any final, like, words of wisdom, things you want to share with us, Joe, or with our audience?
I mean, look, March 15th is coming up. Okay. Your business, your LLCs are all due March 15th.
Yeah.
That has to go first, right? That goes first. Then the individual follows, right? If there's things that are going to stop you from, hold you up from doing the March 15th deadline, then maybe it's time to talk to your professionals and get the ball going. They're asking you to drop all your information now for a reason. They have you times 100, and they're just trying to manage it all with the teams they have. No two ways about it. And and look, if there's things that you want to talk about or plan, it's tougher this time of year too. I can't stress enough. Like, talking to an accountant is very difficult to find time with them, right?
Yeah.
Obviously, I'd like to say I'm very accessible guy. But that being aside, in general, once January through April hits, it's much harder to get a hold of people because they're actually in the midst of return after return. You may get like a window, but it's much difficult. In December, listen, it's a little bit more open. Maybe that's you can't go back in time, but I think you could say, you know what, I'm going to plan for this, right after Thanksgiving, set up time, go down to my professionals and like start lining your ducks up.
Yes.
That's probably the best advice. It's like, can't fix it now. Get through, do the 25 return, right? Let's get that done. Let's move on. Maybe take something away from this. Like, oh, maybe I don't want to do all this other stuff. Okay, well, we're here. We can definitely talk. But going ahead in the next like 8-9 months, maybe you're on extension. Okay, fine. Get the extension done, and then maybe it's a conversation after that. Maybe it's money well spent when you start talking planning. That's the only thing I can tell you. Then you get like that undivided attention. We hear the whole story. We can talk to your advisor. We can talk to anyone else that you've dealt with, and we can help you set up for the future. Like that's the thing I can tell you right now. I know. Listen, I know it's tough for the holidays, all this other stuff, but if you make that carve out that time, carve out that lunch, I think it's money well spent.
Yeah, if you schedule it now, right, plan for it now, then you don't have to worry about it.
Right. Instead of like December 24th, or oh man, I'm running around getting gifts. Maybe I should talk. No, like let's get ahead of that. Let's think about like even once November hits and you're getting ready, you're starting to get ready for things. That's going to be the key time, I think, to get ahead of all this. I really feel that way.
Yeah.
Plan appropriately. Yep.
One of my a phrase that I say often is that leaders don't panic, they prepare. And this is, a perfect, I think, way to kind of cap that off is, you don't have to panic in your business, right? You can just prepare for the things that you want to do. And there are professionals here who are ready and willing and able to help you prepare in a way that's proper and it's going to work for your business and the vision that you've created for it. So, yeah.
Awesome.
Oh yeah, I love that. Prepare, and it's time for plugs. I think we got a minute here. Joe Sarno, right, director with HFA. That's Holman Frenia Allison. HFA-CPAs. That's CPAS.com. HFA-CPAS.com. We are located in Lakewood as our main office with tax professionals also located in Red Bank. So we cover not just the Jersey Shore, but Jersey, and even in neighboring states of PA and New York. So we're here to help you.
Awesome. Thank you. Thank you for coming. It's been an awesome resource, awesome conversation.
I appreciate it. And I really do. I mean, you guys gave me I appreciate you having me on. The last time I did like a podcast like this, it was a sports podcast, believe it or not, years ago that I used to run. So it's cool to do something like this for sure.
Yeah. Well, we're definitely going to have you back on with Faye. Because I think it'd be great to kind of just have like the volley back and forth between the two of you, because I can only imagine just the nuggets of wisdom and insight that'll come from that. Again, as a reminder, this conversation is for informational purposes only.
Let's make that clear. This is for informational purposes only. Obviously check back with your professionals, CPAs and attorneys, before you make any decision.
Yeah. And if you're not, 100% happy with who you're currently working with, then talk to Joe.
Yep. Message me on LinkedIn if you see me there, for sure.
All right. Well, thank you guys. Thank you so much.
Yeah, this was awesome. Thanks for tuning in, and we'll see you next week. We're going to have Faye back next week to continue our conversation. Then after that, we have Michael Z. I need time to practice this last Michael Z from 409. He will be with us in about 2 weeks. So enjoy.
Awesome. Cool. Thank you, guys.
Thank you. God bless.
Bye-bye.